What's going on, everybody? Good evening. Welcome in. We're gonna get this going here in just a couple of minutes. Come on, Archon. Next week is all right, Archon. Whatever you say. Whatever you say. We're gonna get this one going in just a couple of minutes. Just gonna give everybody the chance to hop on in before we get going. I'm doing well, Rudy. I'm doing well. Welcome back. My day's been good, dude. I honestly haven't been doing much trading at all. I got one setup I've been watching, but generally speaking, I don't trade too much to the short side, especially after this long uptrend. I wasn't really in a rush to get short, but the warning signs were certainly there, like I mentioned in the tab. So wasn't necessarily a reason to go blindly short, but with the distribution days stacking up at the highs, got to be a little cautious there. Um, and certainly a change of character in the market overall, certainly a change of trend here in the short term. So a lot of things to unpack in terms of what's going on right now, but yeah, it's really, in my opinion, a great time to kind of step back from the market and exercise restraint, unless you're prepared to either wait for the market to come to some stronger supports, which I'd argue that we're getting real close here in the short term, or if you're prepared to, keep hedges on or even trade to the short side. But yeah, I usually don't really trade the short side. I'm more of a long focus trader, so I'm always looking for the ideal long entries on these types of pullbacks. Which I mean, Amazon still is a prime candidate. 180 is the level I made pretty clear what I was looking to do at 180 today. And yeah, I mean, you could see exactly what happened at 180. It's, kind of obvious. Um, but anyway, yeah, we'll get going and just give it a couple more minutes, probably send out one more message letting everybody know we're getting started, and then we'll get going. Yeah, I mean, Amazon's certainly one of my favorite setup in the market, as it has been. The weekly definitely doesn't look great. It's not something, well, that doesn't look great is certainly relative. I mean, the trend is still fully up, but rejecting off of these highs on reasonably increased volume there. So not ideal, but coming into some significant daily levels here. With the market, S&P, the Qs being in a downtrend, this is the time to start looking for those names with relative strength. And I won't get too deep into that discussion before we officially get started. But that's really where we're going to kick our discussion off is kind of talking about what the market's doing, talk about this change in trend, and really use that to kind of introduce, I'll call it the overall concept of patterns. But I'll give it just one more minute and then we'll get going. All right. Well, a couple minutes after the hour, so certainly safe to get going now. Um, we've been noticing the numbers of people kind of showing up to classes decline a little bit. So, um, if you guys, if you have any reason you're not showing up, feel free to let us know. But we're right now assuming that it's kind of just due to the market pulling back. People are probably think that they don't need to learn anymore. So anyway, going to kick this discussion off, which was originally titled Patterns, with a discussion on trends. So, many of you may or may not be familiar with the concept of patterns in the market. I'm sure you've heard some of the names before, something like maybe a bull flag or a falling wedge or things like that, which all of those, while they can be significant, every pattern really starts with either one or multiple different trends. And there's a lot of different ways to identify the current trend in any given stock. So I really want to start off this discussion tonight by identifying the overall trend in the market, talking a little bit about trend reversals. Yeah, and then we'll get into the discussion on kind of drawing trends and how to actually define a trend. So, and yeah, any questions before we get started on this one? Probably no PowerPoint tonight. We'll just roll with the charts. Any questions? Are we good to go? All right. I'll take everybody's silence as acceptance that they're ready to get going. So everybody should be familiar with at this point that the market's had. Yeah, we'll start the discussion off with the current trend in the market. So everybody should be familiar at this point in time that the market's been in a downtrend in the short term over the past probably 2-3 weeks at this point, aided by a couple different things. Right, we had that kind of conflict in the Middle East. Also, some of the pullback could be attributed to rising rates and changing expectations around inflationary data, but that might be kind of a little bit lower on the tier list of importance. But regardless, the trend has certainly changed in the market in the short term. And this is very, very important to be mindful of. And I started with just the zoomed out chart of the SPY here, because when we analyze charts, really all we're looking for is some kind of pattern, right? And a trend could be considered a pattern. A lot of things could be considered patterns. And at the end of the day, the current trend in the overall market is one of the most important pieces of your overall kind of technical analysis at any given moment. So we're going to start off tonight by just talking through that a little bit, walking through kind of logically how to determine what the trend in the overall market is, and we'll go from there. So starting off here, we're looking at the S&P 500 SPY, and clear to tell, at least when I look at this chart, right, it's very obvious to tell that what was happening after this move here is not the same as what's happening now. And just zooming in a little bit more, right, when I look at this chart, I see a really big change in character. And that change in character is a term you'll hear me use a lot, and it's something that is really important to be mindful of. And what I mean by when I say a change in character is notice how previously, when we had big down days, right? Big red days, the second day was always green every single time here and almost encroached on the highs the prior day, right? Here, this day, we had a big down day. We broke the highs the prior day. And you'll notice every single one of these big down days, the next couple days bounced on pretty high volume as well, right? So here, big down day, bounced on pretty high volume, down day on average volume, same thing. Here, another reasonable down day, gap down there. Every single kind of move lower was bought up very quickly. And you'll notice here, there was a big change in character, right? Where here we have this massive down day, right? Which is one of the most significant down days we've seen in a while, right? This is a full bearish engulfing where the current bar engulfs the prior range of the entire bar before, right? We look back at our chart and this happened once here, and pretty much never again since that. So big change there, right? This is one of the largest candle spreads we have seen throughout the past couple months too, indicating a lot of intraday action there. Generally, these types of bars are something that's common to see at tops and bottoms of trends. We can see this repeated over and over, right? You'll see some of the largest candle spreads we find at the bottom of a trend here, right? Very massive candle spread here, continuation, here, massive candle spread as a continuation. Here, again, massive candle spread. So what I mean by when I say spread, by the way, is the distance from the open and the close. So that's what I'm referring to when I say candle spread. So anyway, big change in character from this side of the chart, right, in this box here, to this side of the chart here. That's not covered by the box. So always when you're looking to identify trend in the market, you want to be paying attention to warning signals such as this, right? And as we talked about in the volume lecture, I believe it was last week, maybe 2 weeks ago, you want to also be paying attention to these volume patterns as well. And again, zooming out here, you'll notice previously, right, above average days are both kind of 50-50 red days and green days, right? So we have some above average red days, some above average green days, right? They're all pretty reasonably mixed throughout the trend, except for right around here, these spots, some more significant above average red days, but the trend was also down here. When we zoom to this part of the chart, or excuse me, the right side of the chart, we see the same idea, right? We're seeing these large above average volume red days, but the trend is up or flat, right? Which is another big red flag in terms of the trend, right? Generally speaking, when you're looking for a continuation in trend, right, which might be some kind of bull flag pattern, right? Maybe it would be something looks a little bit more like this, right? Some kind of consolidation, maybe some kind of pennant, right? Which we haven't talked about what these two types of patterns are just yet, but I'm sure you've probably heard the terms before. So maybe some kind of pennant, right? If you're looking for some type of consolidation, generally it's common to see volume decrease throughout that time period, right? It's ideal to see that volume decrease. However, in this most recent consolidation, we saw above average volume, right? And again, we're continuing to see that. And this isn't something that is only identifiable in hindsight, right? Even you take a look at the chart that I posted not more than 10 days ago, and you can see we identified this exact same thing, right? Previously, you could see these big red days. The very next day, we'd clear the previous day's high, right? So previous high volume red days, we clear the prior day's high. All of a sudden, we get to these highs, and now, which was the day after this big red day, we weren't able to clear the prior day's high, which this is a pattern, right? It's not a pattern that you're necessarily going to see in a textbook with some silly name, but honestly, these types of patterns matter more than anything else because this is what allows you to determine the strength of a trend in any given equity, right? And these are things that can be identified in real time, right? This is something that I identified, when we were kind of just getting started on this breakdown a little over 10 days ago or 10 days ago at this point, right on this day here. And we never cleared this high, right? Which I think I mentioned that note. It's really hard to be bullish until we clear the high of that bar at this point, which we never did and ultimately saw significantly lower. So why did I mention all of this, right? Obviously, this is supposed to be a lecture about patterns. Well, reason behind this is, again, number one, the building block of any pattern is always going to be understanding the trend, right? This is the most important part about trading in general, is understanding what the direction of the trend is and is volume supporting or going against the trend, right? Those are the two main things that you need to have in your kind of tool belt at any given time on any equity that you're trading, right? So you really want to understand the overall direction of the trend. And also you want to understand if volume's either supporting or working against that trend, which in this case, volume began to work against that trend. We saw this big, large candle spread day 10 days ago, and ultimately have seen a reasonably, reasonable size decline, only a couple percent, nothing too crazy, but certainly is significant. So that's kind of looking at trend from maybe a more macro perspective, maybe from a more, advanced perspective, but keeping things real simple here, right? One major thing that's different about the trend from October to mid-April is very simple. The EMAs, right? One of the most easy ways to follow the trend is looking at the short-term 9 and 21 EMAs. So here we have the 9 EMA in yellow and the 21 EMA in orange. You can see back in October, or I guess mid-November, beginning of November, we had the 9 above the 21, and the trend essentially continued up and bounced off these EMAs every single time there was any significant dip, right? Albeit rather historical uptrend, but still the concept still applied. Now, once we see these EMAs cross to the downside for the first time in almost 6 months, right? That's a big red flag, right? It's always going to be more difficult when you see these EMAs cross to the downside if you're looking to get long. So again, it's another reason why you need to identify these trends on the longer time frames, because those of you who have been chasing longs, after this day, I get it, right? Trend still reasonably up, EMA is still positive. I could see a reason for getting long there. But now that the EMAs are crossed to the downside on the S&P, all bets are off. And if you remember nothing from this lecture and you leave right now, the one thing that you should understand is when you are trying to go trade opposite of the trend in the entire market, you need to be very quick, right? You need to be quick, you need to be agile, and you need to have a tight stop. So what that means is you're trading off of strong support. If you're trading long against a downtrend, you need to have a tight stop and you need to understand what you are risking, right? Probabilities are no longer in your favor when you're trading against the trend, and you need to either accept that risk and widen your stop, decrease your sizing, or keep the normal sizing and tighten the stop up and be ready to get pretty much mowed through, right? And that's exactly what's happened the past 4 days. And I've seen it in trade floor, people trying to fight the trend, which it's down now, right? It's down. So you have to wait for the market to come into stronger support, right? And I have two multiple levels of strong support, which I thought were, which I was looking for, right? 508, that didn't hold, right? Probably a little bit intraday, but for the most part, right? Nothing, right? Nothing there at 508. And now back to the 500, right? If you don't have the 500 level marked on your chart on the SPY, I don't know why, right? You should. But you got to have these strong supports identified if you're trying to get long in a downtrend, and you got to have these strong resistances identified if you're trying to get short in an uptrend, right? You just have to, because that's where you need to structure your trades off of. Regardless of that, this isn't a lecture on trade plans, but I did really want to hammer that point home is I'm concerned about some of the things that I've been seeing in trade floor. And you'll notice, at least me, I can't say that I've been the most active over the past few months, but especially these last 2 weeks, I haven't traded, right? As I mentioned, I don't really enjoy going short, especially after such a historic uptrend. So it's not something I'm very interested in. I'm mostly a long focused trader. And when I see the market begin to show signs of weakness at the highs, and especially when I see the market flip into a downtrend, I move to full caution, right? I have no reason to start chasing longs, look for more long opportunities. The time for easy longs was the past 6 months. If you missed it, that sucks. There's going to be another chance. But at this point in time, the trend is no longer up in the short term, right? You zoom out weekly, the trend's still fully up, right? You're crazy if you think this has been a long-term trend reversal, but it's a short-term trend reversal, right? The short-term trend is down, and that's currently very important. So when looking to buy dips, when looking to get long, it has to be done at very important key levels, right? Because there's a lot of warning signs being flashed across the market right now, right? Again, some of the longer term moving averages being lost, right? The 20, the 50 moving averages being lost on the SPY. Same thing on the Qs, right? It's the exact same thing. 20 and 50 being lost here, right? Some of our leading tech names, NVIDIA, right? Starting to break lower. Oops, I can't type. SMH, right? Semis as a whole starting to break lower, right? Directly into support on high volume, right? That's a big warning sign, right? NVIDIA, right? Our prior leader, not quite broken lower yet, but really close. Got a hold of that 833 spot, right? So these are all things that you need to be considering when structuring a trade, right? And it all starts with identifying the current trend of the overall market. So just to recap, I know we covered a lot and it's been a little over 10 minutes, but a couple things we talked about, right? We talked about number one, looking to identify if volume is supporting the current trend, right? Very important. Very clear change of pace here, right? Price is no longer moving higher, it's consolidating, yet we still have these above average sell days, which depicted maybe even nicer than I am currently doing in the chart that I posted is you can see exactly what's happening, right? Price isn't going anywhere, yet we're seeing these high volume sell days, which is coming at the highs. Previously, high volume sell days came at lows, right? We have a high volume sell day, it's a short-term bottom. High volume sell day, it's a short-term bottom. And not only that, but the subsequent day, we clear the previous high of that day, which is a sign of an uptrend, right? Very simply put. Again, big change of character. And these are all patterns that every single one of you can recognize. You just have to understand that it's not going to be something that shows up in a textbook, right? This is something that honestly matters more than a falling wedge or more than a bull flag, as this is what money in the market is truly doing, right? Yeah, a bull flag is easy to identify, but it's not nearly as significant as something like this. So that's my perspective. Clearly it was valuable this time around. Obviously, it's not always going to work, but I mean, this is kind of living proof for this lecture, which it's great that it worked out, but it just goes to show how significant identifying these changing character and price action can and always will be. So we talked about that. We talked about using EMAs to identify the overall trend direction, which at this point on the SPY, it's currently down. So the last thing that I want to mention, which is kind of the point of this lecture, I guess, which is to introduce patterns, is trend lines, which sometimes I like, sometimes not so much, but trend lines, real simple, right? I mean, technically you could draw a trend line all the way up and draw it something like that. My personal preference probably on this trend would be to draw something a little bit more like that. But even that's not really amazing. I'm not really the biggest fan of drawing trend lines as support like this. It's not always really been my thing. But I prefer using the EMAs just because they're a bit more dynamic. I usually prefer drawing trends as resistance. So for example, on something like NVIDIA, if you look back over on the weekly here, right, this trend as resistance was a nice one to be paying attention to. Same idea on AMD, right, drawing a trend as resistance on this spot here. Right, same idea. So anyway, that's generally my preference is drawing trends as resistance rather than support, only because I just, yeah, I mean, I feel like drawing trends as support can certainly be more arbitrary and you can fit it to whatever narrative you want a little bit easier. Like, I could say that's my support trend, but, we kind of clearly broke it right there. And yeah, so not my favorite. I generally prefer drawing trends as resistance rather than support and rather using the key levels in the EMAs as support instead. So that's kind of simple, kind of the fundamentals of drawing a trend there. Real simple. If you're looking to draw a trend line, again, a trend line is the basis of a pattern. So a pattern is generally made up of one or two trend lines. And the way to draw a trend line is pretty simple. You got to have at least 2 points at minimum, right? And the way to understand that is you got to have a rise and a run, right? Think back to your, what is that, Algebra 1. You can't have a line without the initial and ending point, which you have to get some kind of slope. And if I just pick this candle here and draw a line somewhere, that's not a trend, right? There's no kind of correlation or reason for me to have a line such as that. You got to have at least 2 points here, ideally 3, because I could draw a line between any 2 points. It doesn't mean it's a valid trend. Like that's a line between 2 points, doesn't mean it's real. That's a line between 2 points, doesn't mean it matters anything. So ideally you have up to 3 points on that trend. And yeah, so that's just another way to identify trends, right? When price is below a downtrend, you can treat that as resistance. When price is using an uptrend as support or above an uptrend, you can treat that as support. So we got a couple questions here. One from Daniel. Do you think with this new trend that NVIDIA won't bounce up if it hits 833? What's my opinion on that, especially for a strong stock? So it's a great question. In terms of what I'm looking for out of this pullback, I feel like we're getting real close to some kind of short-term bottom, right? I think a lot of people spent time trying to chase the market long all throughout these last couple of days, and I think we're really getting close to somewhere where I expect a short-term bottom. I think somewhere between this 5,000 and I think 4980 zone here on the SPY or SPX. That's where I'd be expecting some kind of short-term bounce. That's that gap fill there on the daily. So I'd be looking for some kind of short-term bounce here, and then maybe as soon as tomorrow. We're getting real oversold here in the short term, and it's the time to be looking for a bounce in the short term, and it's certainly not time to be chasing shorts at this point. That said, just because I think the overall market is kind of getting close to some kind of bounce point, what that means is I'm not just looking to trade anything. I'm looking to trade things with the most relative strength. So very easy to compare, for example, these two charts. Oops, that's 4. These two charts. So Amazon, been one of my top names to be watching in the market for probably 3-4 weeks at this point. And it certainly came back to a spot where it's getting even more interesting. So let's just take a quick look, right? There's an obvious difference between these two charts. I mean, number one, we're at my please push the buy button level. So that's important. But number two, right? Clear difference between these two charts. One is still in a positive trend based on the EMAs, and the other isn't. That's it. Very simply put, right? One's in an uptrend, one isn't. On top of that, if we compare to the QQQ or the NASDAQ instead, on top of that, one was able to break out while the rest of the market couldn't. Amazon hit new highs on 411, and the NASDAQ hit just a lower high. So 2 massive examples of relative strength. So when you're trading against the trend, and this is another thing, if you guys are going to leave this lecture right now and you remember nothing except what I'm about to say, I'll be happy. If you are trading against the trend, all you should care about is relative strength. That's it. Don't go looking for the weakest name in the market and trying to catch a bounce out of it. For example, is Tesla at a spot where it could bounce? Probably. Yeah, it probably is. But these two charts don't even look close to similar, right? This is relative weakness. The market's been hitting new highs. Tesla's been hitting 52-week lows. So that's not somewhere I want to park my money in the short term for a bounce. Something like Amazon is an ideal candidate for a larger bounce or at least some kind of short-term relief bounce to the upside off of this 180 spot, right? Again, we've seen everything we needed to. When the market hit a lower high, Amazon hit not only a newer high, but all-time highs, right? It set new all-time highs on this day. Obviously, it failed that breakout in the next couple of days, but so did the rest of the market. It's came back to a key level of support, right? 180, the prior highs from this base that it broke out of, right? In addition, it's also still in a positive trend while the rest of the market, according to the NASDAQ, according to the SPX, is in a short-term downtrend, right? We compare to something like AMD, right? While the sector's been very strong, these two charts are not the same. This name just broke to new lows. This name is retesting a breakout. SMH, semis as a whole, semis testing prior lows, right? Real close to a breakdown into this 206 gap below. Again, Amazon's retesting a prior breakout. You could do this over and over, all over the place. Johnson & Johnson, healthcare. We look at financials, same idea, right? Financials in a full short-term downtrend at this point. Energy still remains in a full short-term uptrend. So another example of maybe some potential relative strength. Healthcare, full short-term downtrend. Technology, short-term downtrend. Industrials, short-term downtrend. Amazon doesn't look like that. And all those sectors that we just looked at are components of the S&P. So anyway, if I didn't drive that point home well enough, feel free to let me know. But when looking to trade against the trend, you got to look for strong support, right? You got to have a strong level to structure your trade off of. Look for a volume-backed, strong trend in the direction that you're looking to trade that's opposite the direction of the rest of the market, because that indicates relative strength, which is exactly what we have in a name like Amazon. If I remember correctly, even Netflix still looking decent, right? Not great, kind of stuck in a range, but same idea, right? Still could be considered to be in an uptrend while the rest of the market is downtrending, albeit this one has earnings in tomorrow. So it doesn't really matter what's happening there. I haven't looked at Meta recently. Technically still in an uptrend, but a bit weaker there than Amazon. Anyway, that's a big idea there. Question from SR. The EMAs that I'm looking at here are the 9 and 21. I also am partial to the 9 and 20 EMAs. Both of those are kind of fine combinations in terms of short-term trend following. Another one that I see commonly used, at least by Tilio, is the 5 and 13 pair. Also certainly a good pair to use as well. Swing says, does technicals matter when news pops up today like China news for AMD? Certainly not, right? So at the end of the day, right, any kind of fundamental or news piece could come out at any given moment and impact the market, right? But the signs are there, right? There's always somebody that knows about the news. And generally speaking, it almost seems like price, in my opinion, sometimes it's very weird, but it seems like price precedes news a good chunk of the time. Like, for example, AMD's been in a strong downtrend, and it's been in a strong downtrend since the rest of the market started a strong short-term downtrend, right? It's been in a short-term downtrend since before the rest of the market got in a downtrend, which is an example of relative weakness, right? Again, we pull up our NASDAQ comparison here. The NASDAQ or the AMD broke down into a short-term downtrend, right? That EMA crossover officially on 321, where on 321 here, the market hit an all-time high, literally hit an all-time high on the day that AMD flipped into a short-term downtrend, right? So AMD's been weak. So in terms of, am I surprised that some negative news is hitting while this thing's already in a downtrend? Not really. But it's important to realize that it's kind of with the trend, right? The trend would have kept you out of longs in this specific case. Now, was it possible to have some crazy bullish news come up for AMD? Yeah, absolutely. Kind of like we saw with Apple, right? So not always the case. Sometimes the news can work against the trend here, where the trend on Apple here is down. However, we're sitting in a strong weekly support, right? 167 spot, which is the place to try longs, which is something that Flips and Panada and I discussed last week. The place to try longs. And lo and behold, news comes out the next day. Apple's doing something with some AI processor. I don't even know what the hell the news was, but it doesn't really matter anymore because it's right back to where it started. Anyway, yeah, it's interesting to see kind of price precede news. You see that kind of, I mean, I don't want to say it's like a surefire way to kind of go about predicting the news, because it isn't, but it's interesting to see when news bolsters the direction of the trend or can reverse the direction of the trend like that when it comes into a favorable spot. Hopefully that answers your question. Any other questions so far? We've kind of blown through a lot. That's how we like to roll in these classes. What questions do we have, right? I know we're kind of just working off the charts. It's not the normal PowerPoint. How are we feeling about this concept of trends? Are we remembering kind of the most important things to take from this class? I mean, what's everybody's thoughts so far? Let's hear what you guys are thinking. Somebody's got to give me a message in the chat. Rudy's feeling good. All right. That's why you're always here, Rudy. You're always feeling good. I appreciate it. How's everybody else? Rudy's not the only one awake still. Having trouble with understanding with waiting with the perfect entry. All right. Happy to hear it. Jay, happy to hear it. MHD. Yeah, so great question actually from Sam. So yes, we are 100% looking at the daily time frame right now. This concept of trend following and understanding the trend works on any time frame, right? It's not just something that happens on the daily, but as I mentioned in every single lecture, the things that happen on the higher time frames are much more important than what happens on the lower time frames. So for example, right, the S&P is in a downtrend on the daily in the short term, right? There's no denying that, right? The EMAs are in a negative trend. You can't deny that there is a short-term trend lower. You look at the weekly though, you can't deny that this trend is still up, right? The 9's above the 21. So while we're in a short-term pullback, this is still a long-term uptrend. So it's important to be mindful of that, right? So that's the one thing to get across your minds. Next is while we're in a short-term downtrend, that doesn't mean we're not going to get significant bounces intraday, which we got a couple yesterday, right? We got a couple massive moves higher, kind of out of nowhere, right? Which for the most part on the day, the trend was pretty flat. Today, even big move higher off that 500 spot. So anyway, very common to see this type of concept applicable on multiple time frames. This isn't something that's just a daily thing or anything like that. Is it safe to assume then to normally wait for the breakout, breakdown, retest, consolidate, only enter? I'd like to think that most traders are generally looking for that type of action. However, that doesn't mean that it's necessarily the best way to trade. There's plenty of people who trade, the initial breakout that are very successful. There's plenty of people who trade the retest or get long in the consolidation that are also very successful. So it kind of comes down to how well you can execute those types of trades. If you're the type of person that gets very emotional when a stock moves quickly, you probably shouldn't be a breakout trader, right? Because when breakouts happen, price is moving very quickly, and it might be hard to manage the way you trade. If you're the type of person who is really good at being patient and waiting for your ideal entry to come, you should certainly be the type of person who is buying off support, which I would argue most people should be considering to be that type of trader. But if you're a person who can be patient, who can sit on their hands, which again, this should be everybody, really, you should be the type of person who's waiting for those big levels of support to come into play. For example, like that's exactly what I've been doing on Amazon, right? We failed that breakout on the daily over the all-time highs, which I said, get long over 184, get long over the all-time highs. We broke above the all-time highs. Next day we opened below and rejected that breakout. This sign alone, right? A failed breakout is always a sign to kind of take your foot off the gas, right? You got to be careful getting long after a failed upside breakout. So we tried breaking the all-time highs. Next day, we gap below. The next day, we rejected them again. So that's a real clear sign to just give it a rest, stay away for a bit, because likely it's got a little bit more downside in it. And you can look at failed breakouts all over the place, right? Semis are a big one, right? Tried to have this breakout. I mean, really, even here, you could consider this a breakout, or even here, right? It tried to crack these previous swing highs, failed the very next day, failed the same day, I guess, and never cleared those highs again, and also has moved pretty significantly lower following that move. So failed breakouts, always a place to kind of be cautious. But me personally, right, as I mentioned at the beginning of the class, when you see the trend in the market shift, look for the names with the most relative strength. And if you want to keep trading in the direction the market was previously trending, do it and only on those relative strength names, or wait for the market's trend to reverse once again back to the upside. Right now, trends down. So if you're looking for those long opportunities, you're looking to catch kind of the bottom on something, look with the names with the most relative strength. It's going to be the easiest, right? Will it be possible to get a massive day out of, maybe something like a Coinbase, right? Coinbase, big mover. Yeah, I mean, Coinbase could have a 10% day tomorrow, right? It certainly could, and maybe it will, right? Who knows? But for me personally, it's not something that I'm looking to kind of take the bet on, right? I know that Amazon is currently showing relative strength. I know that people love this name right now. So there's no reason I shouldn't when the market's in a downtrend too, right? This is going to be the first name I'm looking to lead when this bounce starts moving in the other direct, or when the market starts moving back to the upside, which it will, right? This isn't the end of the world. And if you are an investor with any form of time horizon that's longer than a couple days, you should certainly be thinking about starting to consider some buys, right? I mean, there's no reason not to, right? Start to think about, adding a couple shares here and there, right, of companies that you like. The market's down a decent amount, right? 10 or 5%. That's a reasonable correction, and that's a reasonable place to start considering some buys. And is this the time to bet the farm long on, Coinbase? Probably not, but things to consider, right? You have to have a different mindset and reverse the way that you think about markets, and really be mindful that these pullbacks are completely normal. That's one thing that I think people are really kind of conditioned to forget is over the past 6 months, the market has pretty much only gone up. And if you've been going short or you haven't hit it long once and now you're deciding to get long, that's honestly your fault. I mean, there's been no reason to be short for the past 6 months, pretty much until now. So there's going to be a nice uptrend higher soon, or I shouldn't say soon, but again, but it's not the time to be looking for some kind of we had a 10% correction mid-year, late summer, but after that, that was pretty much it. So another point to kind of drive home there is these types of pullbacks are incredibly normal in every marketplace. So if this is the first time I've seen some kind of pullback, I got news for you. It won't be the last, and it's not going to be the worst. So get used to it. This type of stuff happens. So yeah. Do you use any indicator on short-term trades like 5, 15 minute? Yes. So I'll kind of walk you through that real quick, even though it's not necessarily the purpose of the lecture. Generally, what I look for when I'm playing, well, I already have it all up here. Load it. So this is the 5 minute here. So generally, the things that I have open are pre-market high, pre-market low. So that's the green line, red line. I have the hourly 20 EMA. So it's this red line here. And then I have the 9 and 21 EMAs. That's it. And then I also have the 30-minute up right next to it where I can kind of see a bigger picture. But pretty simple for me. I don't do anything too crazy. It's definitely not the first in something like this. So, yep, that's pretty much what I do. All right, how's everybody feeling about this concept? Are we getting a better idea of not only the trend in the market currently, but are you guys going to be able to identify this type of stuff in the future, or at least have some ideas on where to start? If so, we'll talk through how to start identifying a trend reversal. Rudy, hope so. All right, so I want to just draw something out really quick, which this is going to be pretty disgusting. So bear with me here. I'm not an artist. That's not why I got hired here. So let's draw out this type of, potential future move in the moving averages here. So something like that. Oops, I didn't really want it to do that. All right, whatever. We'll say that's the move in the moving average. And then we'll say we have something like, oops. Then we'll get into this guy here. All right. So let's say our EMAs make some kind of move like this, right? So that's our kind of 9 and 21 EMAs. And then let's say our price action does something like that, right? This is the ideal place to be looking for some kind of reversal. And when looking for a reversal in the market, right, there's a couple ways to do it. You could be the person who's looking to kind of catch the bottom here at these strong supports. So if this is a strong support, you'd be looking to get some kind of speculative entries here. Or you could be the type of trader that's looking more for the reversals back over the moving averages when we have some kind of consolidation in something like here. And this idea is actually really well illustrated in a drawing that I've referenced before, which I'll pull up now. I really like this guy's work, Oliver Kell, and he pretty nicely summarizes this exact same idea. Let me see if I can pull this image up really quick. Oh, that's not in English. Open image. Oh, seriously? It's ridiculous. We'll be able to figure it out eventually. All right. Anyway, this is a similar idea to what we just drew out, right? You can see in this section, oops, here, let me annotate this as well. Walk through this. So again, I really like this guy's work. Oliver Kell, if you're interested in looking him up, I really like his work. He won the U.S. Investing Championships in 2020, which some might argue might be a little bit unfair, but whatever. I still value what the guy has to say. I like how he trades. So anyway, and I also have the book. That's how much I care. So anyway, this is the same kind of idea that we talked about earlier, right? Where we have that positive kind of EMA cross here, that 10 above the 20 EMA, which would indicate an uptrend, which this actually seems like this drawing is not exactly accurate. Technically, these colors are opposite. Technically, the blue line is the short-term EMA here, and the red line is the long-term one, but I guess that's not as important. So just ignore the labels there and just pay attention more to the lines here. So anyway, right, this is the same idea as the uptrend, right? And this concept is repeated here. And then this would be the similar idea. Oops. This would be the same idea as the reversal that we just talked about, right? So that's a terrible drawing. Again, they didn't hire me for my art skills, so I apologize. But here you can see the same concept that we just kind of drew out, visualized there, right? So we'd expect to see some kind of reversal on the EMAs. So kind of two ways to be trading any reversal in trend, right? You could wait for that move back above the EMAs, get long that first tag of the 9, or you could try and get long at the dead bottom, which, obviously there's always going to be some risk to that. One example of this recently that I have in my memory is Moderna. This was a couple weeks ago. You can see this concept pretty clearly illustrated here. It's the exact same idea, right? Where you look and see we got this breakdown below the EMAs, right? Negative trend here, 9 below the 21. We get this first break back above the EMAs. Then we get this positive cross here, 9 back above the 21. You draw this little trend line, and we get the break above the trend line and nice move higher. This was like a 15-20% move in just a couple days, which this is the exact, literally exact. This looks exactly like this, right? I mean, I don't really see many differences. Feel free to call me out if you think I'm oversimplifying it. But here you can see we have that reversal extension, right? 9 below the 21 EMA. We get the wedge pop, right, back above the EMAs here. We get the consolidation into the EMAs. So this would be the EMA crossback phase here, right? And we get that move higher. Now, this didn't transition into a significant trend higher just yet. It looks like still kind of working on that. Got to clear that 112 spot if we're looking for any further upside here. But that's the big idea. And this book is called Victory in Stock Trading. And I'll just post a link. I really like it. Honestly, it's more expensive than it should be, in my opinion. It's like $50. I don't really, yeah, I thought, I honestly was a little bit disappointed in the price personally. But if you really, I decided to support them just because I like the content in it. But anyway, if you decide to get it, I'm sure it's maybe online somewhere or something. Or maybe we could do some kind of giveaway if you guys really want it. We could try and give one out. Let me see if I could even find the link. I remember it's not on Amazon, and that was part of the problem. I had to like pay for shipping. I'm getting the book right now. So this really is kind of this is like this book, and funny that we're talking about it. This book has been kind of the guiding, I'll call it, textbook of this lecture alone. So here's where you can buy the book if you want it. Again, I'm not sponsored. I didn't even plan on bringing this up, and honestly, don't pay too much attention to this. You're not going to get a 941% return if you read this book necessarily. But yeah, so how much is the PDF? Oh, still $50. Okay. Well, anyway, yeah, so I really like this book. If you decide to get it, go ahead and do that. But yeah, it essentially describes most of the kind of EMA trend following concepts that we talked about tonight, and really did serve as kind of, I'll call it, my formal education to deliver this lecture, I'll say. So again, really valuable book, especially relevant now. He's also on Twitter too. And again, it really sounds like this is just like an ad for this guy, but I promise it's not. Yeah, this is he's on Twitter too, and I like to follow what he has to say on Twitter. There's really like a couple people that I'll ever listen to that aren't myself, and that's pretty much Tilio, River, and like this guy on Twitter, and like maybe a couple other people for Flow, but that's kind of it. So, yeah, I definitely, I guess it yeah, didn't mean to turn this into an advertisement for that book, but I really find value in it. I think it's worth it. Um, yeah. So if you decide to purchase it, that's cool. If you don't, that's cool too. We pretty much talked about the concepts all tonight. And at the end of the day, the most important concept in that book is really this. This is the most important concept. So I mean, this is the most valuable piece of that book. And the book kind of just describes this applied in different examples, which to be fair, this lecture kind of did that. So anyway, that's a big idea. Any other questions on that? Gonna let the dark pools and whales catch that low. Yeah, like I mentioned, bottom ticking the low ain't easy, right? It's very difficult to do that. You got to be real cautious about how you do that, right? So wall 500 is a strong support. That doesn't mean just get long with the whole boat in long at 500, right? When you're trying to catch a bottom like this, and if you were really trying to do it right, the way that I would do it, and the way that I actually plan to start doing it, ideally as soon as tomorrow. I really should have started today on Amazon, but ideally as soon as tomorrow. Start small, right? Don't necessarily go with the full port in, but start some small speculative positions, real small position size. And if we do get a confirmed reversal back above the moving averages, then you could add on if you want, right? Or you could sell and reposition after some consolidation. But go ahead, try catch the bottom if you want, but just size down when you do it. Or if you really want to keep the normal size, just keep the stop tighter, right? Simple. All right. Any other questions on the trends piece? I will probably just introduce some patterns real quick since we got a little extra time. But again, this stuff, I mean, honestly, the way that I see the patterns, it's like, I used to have kind of a whole lecture on it, a whole hour dedicated to it, but I don't really think it's too difficult, honestly. So I don't know how much value I provide in really kind of walking you through. Is that picture called a wedge pop? Yeah, there was part of it. There was kind of a wedge pop. We will walk through kind of the PowerPoint real quick, just on some patterns here, and just talk through a couple. Again, I'm just going to kind of click through a couple things and show you guys. This right here is kind of a simple cheat sheet on patterns. If you're first getting started charting, it's certainly kind of a place to start. Not something that I really use religiously. Again, right at the end of the day, I don't really think these patterns are the most valuable thing to be looking for. I personally find trends to be much more important. Is this shared in my tab? Oh man, I probably shared it when I originally presented this lecture, which was like maybe 3 years ago. If I did put it in my tab and pin it, let's see if we get lucky here. Um, um, I don't know. Let me see if I can find it. It's also a great way to look through people's tabs if you need to. Oops. There we go. Patterns cheat sheet from tonight. I knew it was there somewhere. There we go. Enjoy. Cool. So yeah, just talking through a couple of these patterns. I'm not going to go through the whole list, but again, right, things to be useful for or useful to be paying attention to. Let's talk through a little bit of the symmetrical triangle, and let me run through the presentation here real quick. Here's what the kind of first pattern that we'll cover looks like. This is called the symmetrical triangle. Could be either bullish or bearish, depends on the direction that price approaches from. And a couple different ways to structure a trade based on this. First, you could enter on the breakout or the retest. On this one, technically in symmetrical triangle, you want to see kind of that third touch of either trend. So if there was that third touch, you could go ahead and enter at the trend line support if you so desired. But two completely valid entries here on the breakout or on that retest. Your stop loss, a couple options for it. It could be below the prior high or this bar's prior low. It also could be a daily close back within this trend. So a couple different ways to think about it. And then profit targets, generally the easiest way to define them are just the pivots within the symmetrical triangle. So in this case, it was just the two places it rejected that uptrend, which was here and here. And you could see how those levels played out in terms of a target. So reasonably simple there. Again, I know I kind of blew through that, but again, I think I personally don't think this stuff is too difficult. And yeah, pretty easy to just kind of look at that cheat sheet and kind of get the general idea for these patterns. Like anything in the market, right? It all just takes practice. But the trends, I think, were a much more nuanced topic. And I personally think that is infinitely more valuable than being able to define this type of stuff. Anyway, ascending triangle, similar idea here to the symmetrical triangle. You have kind of this rising trend line acting as support. However, the difference here is there's a horizontal resistance zone rather than that declining trend as resistance. And you can see how that kind of pans out here. In this case, you can see that level acts as resistance. Once we break above it, that retest valid entry or that bounce off that lower trend third time. Two valid entries there. And profit targets would just be prior resistance levels, which I didn't have drawn out, but pretty simple there. Descending triangle, again, pretty much the exact opposite, characterized by this downtrend acting as resistance. You have the short-term support acting as a bottom. Valid entries, you could short at this resistance trend. You could also short on the break below trend or break below support. This was pre-split Amazon back in 2022, 3K a share. Gotta love it. This is a nice vintage screenshot. I'll have to keep this one forever. This is a good one. Again, stop loss, a couple different ways to frame it. A safe way to trade patterns is always on a failed breakout. So if you're trading the breakout here, a safe place to stop out is if you close back within the pattern. You could also stop out below this prior level of support here. This looks like a pretty significant spot there to be paying attention to. So something to be mindful of there. So again, just to cover some overall themes of trading patterns, generally your entries could be based on bounce or rejection of the trend. So entering at that support. You could enter on that break or retest of the trend as well. And your stop loss is based on invalidation. So for example, this breakdown is invalidated if you reclose right back into the pattern, or this symmetrical triangle or ascending triangle isn't really valid until you actually break out. So if you break back into the pattern, you don't really have your thesis anymore. So stop losses on invalidation are always good. You could also find some pivots nearby to use as a stop. And also profit targets, pretty simple, right? Shouldn't be anything, groundbreaking here, which are just based on previous support or resistance. So that's kind of the big idea. I got a bunch more slides here, but really nothing kind of too groundbreaking. It's essentially just us going through these variations, which I don't know if it'll be incredibly useful at this point, but that's really the big idea of the patterns. Again, it's not anything too crazy, and also not something that I prioritize at this point in my trading. And it's not something that I would necessarily be looking for out of you guys either, at least in terms of, taking your trading to the next level. You could spend all day looking for patterns, but it's just not something. The trends are much more important. And with the trends, you'll find more significant patterns anyway. So that's kind of my take on that. Yeah, you guys have any questions on that? Any questions, any comments, any concerns? Everybody feeling happy? Everybody ready to trade the trend? That's cliche. I don't like saying that, but everybody ready to follow the trend and not be silly. When we are able to identify a trend, would you then advise to look for patterns? Yeah, that's a good way to think about it. The only patterns I really like are really looking for consolidation, as those could provide, those generally do provide quality entries within a trend. So generally speaking, I think that's a great kind of way to go about things is, yeah, first and foremost, identify what the trend is and identify where you're at in that trend. That's always the most important thing when starting technical analysis, besides identifying key levels. And then outside of that, yeah, I mean, if you see, some kind of consolidation or some kind of, wedge or anything like that, go ahead and chart it out. The funny part is over the last couple months, there was really no pattern that you'd see in a textbook show up on the SPY, right? So if you're waiting for like a bull flag to form or something silly like that, you would have never got an entry because there's not really any textbook pattern here. All you have to do is, I mean, it's more about key levels, right? You break through this key prior high, you get long. You hold on to, these key lows, or, you break above this previous high here, you get long. You break above this 52-week high here, you get long. You break above this high here, you get long, right? It was mainly based on following trend and identifying strength and trend. Like you see this gap higher, the trend to the upside is still strong. Gap higher, trend to the upside is still strong. So it's funny because, yeah, recently, if you were looking for patterns on the SPY, really over the past 6 months, you wouldn't have found shit on the daily. There's just simply not a single pattern here. There's really nothing to trade off of in terms if you're looking for a pattern, except for here, which maybe you could call like a, I don't know. I think technically that's called a bullish rectangle, which I think is ridiculous. But this is really the only significant consolidation, at least on the daily, right? I'm sure there's plenty of patterns on the lower time frames, but on the daily, you wouldn't have found anything. And if you were only looking for patterns, you wouldn't have traded anything. So me personally, again, it always brings me back to trend following. That's looking and identifying strength in the trend, looking and identifying the direction of trend, and that'll take you as far as you need to go, in my opinion. All right, everybody. Been a pleasure. Again, right? Oh, Charlie's son from that Tinder date. What am I expecting going into tomorrow on the SPY? I'm getting close to looking for a bounce. We're real oversold here in the short term. We're at that key 500 level. Right now, I don't see too much more downside below 5,000 to 49.80 SPX. This is the spot I'm looking for a short-term bounce. Yeah, that's it. Looking for a short-term bounce here. It's not really the place to chase shorts. If looking to get short, I'd be watching for 5,100 to get short again. But for now, not the place to get short. It's the place to be looking for at least a short-term bounce, which could turn into a long-term reversal, but short-term bounce at minimum. And you know what? We could, drop another 5% tomorrow, 100%, but the risk to reward just isn't really there for me to start participating in the short side at this point. What do I think about DJT? Yeah, DJT is an interesting one, right? I mean, that one's moving kind of purely on hype. I don't really have much to say. I'm not super in tune with what's going on here in terms of the fundamentals. I don't have too much to add. What I can say is based on kind of a volume price analysis perspective, you got a suspicious amount of buyers stepping in today. It's up 15% on a day the rest of the market was down. Kind of inside day here. I'd be looking for it to break this prior bars high at 27.50. If you really want to trade it, you could get long above that. If you want a bit of a safer entry, you could wait till today's high at 28.3, but not something I'd really trade personally. It's just, I mean, I put it in the kind of crowd of meme stocks, AMC, GameStop, that type of stuff. It's just not something I really get involved with. But it looks like you get long at above 27.5 pretty reasonably, especially after today's bar. But yeah, it's you got to be mindful that ultimately it's a meme stock. That's my perspective there. Intel, yeah, this one's kind of sad. Had a real good run there, but yeah, certainly came down pretty hard. Earnings is going to be kind of the change or kind of the tell there. But if earnings wasn't coming up for the next couple months, this one I'd be looking for down to 33s, 34s there. Seeing that volume expand on the way lower, that's a negative sign. And it's something that we're seeing across the semi sector there. Marvell, oh, actually, I know I said I didn't draw support uptrends, but this thing is actually at one of the better defined ones here. Ooh, breaking down. Something to be mindful of there into tomorrow. That might be a trade. AMD, same idea. The rest of the semi sector is just kind of struggling here. SMH on the verge. I mean, really kind of hanging on by a thread there. Yeah, looking pretty sketchy. All right. Well, I appreciate everybody's time tonight. I always enjoy doing these lectures with you all. I hope you guys enjoyed as well. And with that said, I will see you guys all in the next one. Adios, everybody, and have an excellent rest of your evening. Thanks again for your time. See you guys soon.